Hi, welcome to this presentation introducing finance and accounting. I hope that this short introduction will be able to provide you a better understanding on what is finance and accounting, the purpose of understanding finance and accounting, what is finance, what is accounting, and the interrelationship between financial accounting, management accounting, taxation, and audit. Why do we need to understand finance and accounting? Today we live in a world that is measured by money, dollars and cents, euros, renminbi, yen, etc. Finance is about understanding and managing your money, where, when, and how much of your money is coming from or will be going to. How much do you need, when do you need it, and how you are going to get it. To understand and manage your money, you need information. Accounting is the function of providing information that is used to get an understanding of the money movements and to facilitate decision making. What is finance? The understanding of finance includes understanding and managing what you have, understanding what you can do to grow what you have, understanding where and when to get funding when needed, choosing amongst alternatives by understanding what are the possible outcomes for each alternative. Basic finance focuses on risk and returns. Finance derives its basic information from accounting information and the understanding of the underlying business and the business environment. Hence, finance is closely related to accounting, and an appreciation of accounting will help a clearer understanding of the financial information being used, the underlying assumptions, and potential risks and opportunities of relying on those numbers. What is accounting? Accounting provides information by identifying relevant financial data, classifying and recording the data in useful and meaningful ways, and facilitate reports to the different interested parties. Accounting provides a structure so that the treatment and valuation of transactions is based on a common understanding and acceptable practices, and that the information created is available for different users' analysis and comparison. Accounting reports organize data to provide information for various purposes, involving both internal and external users. With the diversity of user information needs, the accounting discipline can be further categorized into more specialized areas such as financial accounting, management accounting, tax, and audit. Financial accounting. Financial accounting is the primary basis of accounting for transactions with the purpose of providing standards for recording general financial information to diverse users, both internal and external to the organization. Financial accounting is guided by Generally Accepted Accounting Practices (GAAP) and Financial Reporting Standards (FRS) in the interpretation and treatment of transactions and the reporting and presentation to users. Generally Accepted Accounting Practices incorporates common accounting practices with local regulatory requirements, as well as compliance with the published standards. International Financial Reporting Standards (IFRS) are developed to address differences in practices and loopholes that enables misrepresentation in growing globalized economy. Financial reporting standards do not require details to be reported but summarized financial data, sufficient to provide a true and fair representation of the organization's status and performances for analysis, to enable the users to derive their own conclusion. That is, accounting do not provide conclusions but information. Financial accounting main objective is accountability and focuses on recording and reporting historical data accurately. This is achieved via journals, ledgers, and standard financial reports. Financial accounting reports are required for statutory filing to enable users outside the organization to be able to access basic information about the company's finances. In order to ensure accuracy and compliance to required standards, an audit of the processes and transactions may be required for financial accounting records and reports. An external audit is usually done by an external independent party, an auditor, or a public accountant as they are called, to ensure that the recording and reporting is compliant to required standards and reflects a true and fair representation of the company's affairs. Unlike an external audit, an internal audit is established as part of an organization to assess compliance to required organizational standards and practices. An internal audit is usually independent of the other departments in the organization and reports to the senior management in order to be effective. Management accounting. For the purpose of management, greater details of plans and transactions and other information are required for the organization. Management accounting focuses on information for management purposes and may include detailed confidential information exclusive to a certain individual or group only. This is to support management functions of planning, organizing, control and decision making. Focuses on the future rather than what is over. It is driven by assumptions about the future while considering historical facts and includes both financial and non-financial considerations. As management information are internal in nature, they are not subjected to compliance requirements but are developed in accordance to management needs. Key areas of management accounting information includes costing and pricing and profitability studies, which involves financial modeling, budgeting and forecasting, performance tracking, and variance analysis. Taxation involves the portion of profits that is computed and payable to the tax authorities to the relevant countries involved. The computation of tax is often derived from the financial accounting reports, adjusted for the differences under the tax regulations of that country and the financial reporting standards that are adopted. Tax is a financial tool of governments to encourage or discourage various economic activities in a country. These incentives or disincentives, additional statutory requirements are often driven by acts, regulations, and notices published or passed by the government and enforced by the tax authorities. Financial accounting results in an accounting income or loss being computed based on the FRS and filings are enforced by the corporate authorities of the country. Tax payable is the taxable income derived by adjusting the accounting income taking into consideration the requirements under the tax authorities. Integrating financial and management accounting, tax and audit. In practice, taxation and management accounting information is often concurrently developed together with financial accounting information requirements in a single integrated financial and management information system. But with adjustments to suit the requirements of the financial reporting needs, the management needs, tax filing requirements, and to facilitate audit. Details are usually designed with management needs in mind. These may be recorded in separate system modules and summarized information mapped and posted to meet the financial accounting requirements. Details may also be required for tax purposes, and these details need to be designed into the integrated financial system such that tax adjustments can be made with little manual intervention. Various systems exist today incorporating CRM, financial systems, HR and payroll systems, sales systems, etc., which are detailed in specific functional requirements, but overall are all still driven by financials. We've now come to an end of this presentation. Thank you for watching. Keep safe and we'll see you again next time.